All right, everybody, what is going on? My name's Scott Garber. This is Andrew Petcash, and we're back with our Friday series where we're bringing in founders, executives, investors across the sporting landscape to go ahead and not only, impart wisdom, but to shrink the gap and connect the dots and give our members more time to ask questions that can propel, both our personal and our professional journeys forward. I know that's redundant for a lot of faces I see on the screen, but for all the new folks, guys, this is an interactive session, right? So the way we typically do these, I'm going to introduce Brian Feeney and what he's doing with Tyton Partners. We're gonna have a little dialogue back and forth just to lay the foundation, and then we want to save ample time, for you guys to be able to ask questions. Don't hog the mic. We got a lot of folks that are hopping on, but the whole idea here is to drive some familiarity and then continue to use this as a relationship builder for future conversations. So, without further ado, Brian Feeney, welcome to the Profluence community, man. How are you doing today?
I'm doing great. It's great to be here. Appreciate the opportunity just to introduce myself and the work I'm doing at Tyton Partners.
Love it, man. Love it. Well, listen, it's your story to tell, right? So give us a little insight to who you are, a little, background on Tyton, and then we'll build from there.
Absolutely. So it's nice to meet everybody. Brian Feeney, I'm a director at Tyton Partners. As we were talking about before, I grew up in Summit, New Jersey, and was always a avid sports fan. Loved going to the Giants games, Devils games, even Nets until they betrayed New Jersey and left for Brooklyn. I also love playing sports. I was a football and lacrosse player. I ultimately had a lot of success in lacrosse as a goalie, thanks in part to my brothers. None of them wanted to play goalie and they needed someone to shoot on. So as the youngest of four, I really had no choice, and they strapped the couch cushions to my chest and legs and threw me in the net. As painful as that was, I was thankful. I went on to play lacrosse at the University of Pennsylvania, where I started for 4 years and was an All-American, and luckily got drafted to play for the Denver Outlaws professionally in the MLL at the time, which has since been uprooted by the PLL, if you're familiar with sort of the professional lacrosse world. But sadly, professional lacrosse, it's not known for its lucrative contracts, and it cost me more to fly to Denver for practice for a season than my whole entire contract was worth. I definitely needed a day job, and one of the reasons why I'm thankful to be speaking with this community and a part of this community is because I really have my sports network to thank for basically any job I've taken in my career, whether it was UPenn, lacrosse, and the entire athletic network. I was a great alumni even in high school that ultimately led me to the world of finance. I interned sales and trading at Morgan Stanley for a summer from the help of somebody from my Summit Lacrosse alumni network, and ultimately ended up in investment banking at a firm called Macquarie Capital right out of college, thanks to a referral from a UPenn wrestling alumni. So at Macquarie, I focused mostly on M&A advisory and capital raising for financial institution and financial technology companies. So it was mostly marketing and advising on the sale of these companies that were sort of mid-market to bulge bracket type, multi-million dollar or multi-hundred millions to billions in terms of the enterprise value. And after 2 years there, I sort of cut my teeth in the analyst program, and I wanted to sort of get out of that industry, work for a bit on the corporate side, and ultimately landed a role at ESPN in their finance and strategy team, where I focused on digital media. And again, this is in part thanks to my sports network, because I applied for a role with probably 500 other candidates. And the only reason I landed an interview was because the person that was in charge of recruiting for that role happened to play lacrosse at the University of Denver and noticed that the Denver Outlaws was on my resume. So again, just as I have that network to thank. But I did a lot of fun things at ESPN. I helped integrate the acquisition of BAMTech, which was the streaming service behind the MLB at that time, and that ultimately became the backbone and foundation of ESPN Plus, which was Watch ESPN historically. But I also worked on rights acquisitions for professional sports teams, specifically like a volleyball league, which was super interesting at the time, and also helped run the P&Ls for business lines like the X Games and the SEC and ACC Network Extra. So I loved my time at ESPN. I thought I would like to get into the investing side again, or the deal making side again, but with sports specific, as opposed to sort of the financial technology companies I was focused on at Macquarie. So after a few years, I got back into deal making, and I sought a smaller investment bank. I was just at these two very large companies. So there's an opportunity to get more responsibility and to really work with founders, which is at the core of what I wanted to do as a career, and ultimately found Tyton Partners. And happy to sort of just give the quick background on what we do at Tyton and sort of how we got into sports and sort of my role within the organization. But Tyton is a lower middle market investment bank that was founded a decade ago by two founding partners that had a long history in education as bankers, investors, consultants, and they wanted to create this highly differentiated, highly specialized, evolved advisory platform where we essentially wrap an investment bank around a consultancy agency. And through that, we add a little extra insight, a little extra reach with client engagement. And so we have the investment banking side based in New York, where I am right now, and the consultant side based in Boston, respectively. What we do at Tyton is we specialize in this deep, narrowed focus and what we call the global knowledge space, which is our umbrella term for any company that falls under the verticals of early childhood, K-12, higher education, corporate training, human capital optimization, alternative credentials like boot camps. And this is really pure play SaaS technology companies, tech-enabled companies, even services companies that sell technology or services into K-12 schools or districts, higher education universities. But we also work on the institutional side. So we help universities merge. We sold many elite private K-12 institutions and really dealing with companies across the capital spectrum, some very early stage, some very late stage. And I would say our sweet spot is the sell side M&A advisory. And we probably in the 5 to 50 million, 5 to 30 million in revenue. And we really specialize in servicing founder-led sort of bootstrap businesses, or even ones that have taken on some capital. Really folks who haven't gone through the process before at the lower middle market. You're sort of at that beginning stage of an exit strategy, or do I want to raise capital? So, I'll pause for a second since I've been speaking for a while, but I can get into how we got involved with sports and specifically sort of where I'm playing in that field in a second. But I just wanted to.
You're spot on, and I think it's so good to understand the origin story. And just for context, Ryan's partner in this is Chris Liddell, who is in the community as well. And, it's been really interesting to get to know Tyton. There's a lot of folks that come in with a sports-specific thesis, whether that's on the investing side or on the M&A side. But Tyton's been very interesting because, their catalyst into this, as Brian alluded to, was more through the education space. And so, they're tied so tightly here. And there's also a ton of evolution going on in the both K-12 and higher ed space. So Brian, I'd love for you to explain to us one, a little bit more how sports fits into what you guys do, but secondarily all the change that's going on, where you guys see some opportunities, where the landscape is evolving to, and then we'll open it up for a break of questions. So if you have any questions that Brian's talking, feel free to raise your virtual hand or drop a note in the thread, and then we'll pull you on after. But Brian, if you don't mind continuing on, this is super helpful.
Yeah, absolutely. As mentioned before, our core is in education, but education really allows us to understand the needs of administrators, of the schools themselves, of their parents. So I came in with the ability to sort of pick and choose which subverticals we can focus on and expand our reach and global knowledge and find this nexus of education and sports. And our focus on sports really allows us to see the similarity and differences with student athletes, because we really want to service the entire student life cycle. And athletics is such an important part of student life. And to be successful, or to be a successful technology platform for high school sports like a Huddle or sports administration platforms that want to sell their software or their services, their marketing services to a conference like the SEC or the Notre Dame athletic department. These companies really need to understand the complexities of selling into schools and into K-12 districts and to conference and to parents, because even gaining capture of the parents' dollar it starts for example, a vertical focus enrichment program in the enrichment space, you have youth sports where you start at the way beginning, and there are people who have after school swim schools or soccer skill schools or tutoring services. And then you have a handful of consolidation opportunities to say, hey, if we're taking money from the parents, let's do this horizontal strategy and buy up some camps and then buy up some vertical focused swim schools and then upsell these brands to K-5 STEM education programs and then sell tutoring services and college readiness services and college administration consultancy. It's a super interesting model that maybe a lot of you have been familiar with the youth enrichment brands that's backed by Roar Capital and have the US sports camps. And there's just a super interesting thesis there. But in general, and we can sort of get into all the noise that's happening with NIL and the advisory that's needed there. But I'll just end off on one more point. Our sports thesis at the sort of center of education and sports itself is there so many, as I alluded to, ERP-like software platforms that provide the various functionality that one would need to run a business like a higher education athletics department or even a national governing body, which service the sort of Olympic sports. And if you look at all the different sort of technologies that would service these departments, you have stats, live streaming, alumni management, athlete management, ticketing, outward-facing tech like the consumer and live streaming and fundraising, inward-facing tech like the management side that you need compliance, health management, NIL, outplacement, job placement, and all of these platforms that sell into these schools are pretty disparate and not all on one consolidated platform like you would see in education, which would be an SIS or a student information system or a learning management system. Maybe a lot of you recognize brands like PowerSchool or Canvas, where your classes or your student data or your scheduling is administered in college. There's nothing like that that's selling into the athletic department that has all of these technologies, even starting from the recruitment side to the student success side. So huge thesis for roll-up. Private equity has recognized this and are beginning to have conversations with folks like us who know the taxonomy of the landscape and where these technologies are in terms of their size and trying to piece together the assets that make the most sense.
That is what you just broke down there, I think has been the Achilles heel of pushing this sporting ecosystem forward. It's not only the fragmentation from within, but it's all the different service providers that come in, and there's no unified solution. Like we can look into, other verticals of higher ed, like you refer to those SIS or ERP systems. So, I don't know how many folks on the call today try to work with universities or coaches or athletic departments, but coming from my Captain Hughes days, it was one of the most challenging things. And that's where folks like Brian and what Tyton's doing are tremendous resources. One, as you're building your business, they have a great understanding of what's going on across the landscape and a lot of relevant relationships. But secondarily, we're building these businesses to find alignment to try and exit, right? And to try and be a part of what's going on as the industry continues to roll up. And so Brian, maybe before I do open it up, I want to just touch on that side of it. You talk about the PE consolidation, you talk about a lot of, things starting to happen. When do you guys start building relationships with founders and, technology companies? What does that look like? Or the thesis through the Tyton lens, just for our users to get a better understanding of, when to reach out, what's an appropriate time to start having this conversation?
Yeah. And that's a great question. And from the investment banking side, whether you're building fan engagement, athlete performance platforms, media infrastructure, you need to operate with exit readiness in mind, even if it's years out. So we are beginning these relationships as soon. There are some pre-revenue companies that we're talking to and just giving a sense of, hey, here's a partnership opportunity. With our resources in our network and sort of our past, you mentioned Chris Liddell before, who's done a lot of work with the PGA, with the USGA, with the International Olympic Committee. So there are folks that we're talking to, which would be great to have a relationship in terms of M&A advisory down the road. But we are saying, hey, I've done all this work with the USA lacrosse, and I happen to know just from my own anecdotal experience that they have a terrible, and this is just hypothetical, but they don't have a great scheduling platform. I don't want to call out USA lacrosse or anything like that. They don't have the right administrative platform or the electronic medical record keeping. And we know this. I know them very well, and we think you have a great solution. You should talk to them, and then we can get into some of the stats that we talk about sort of in these early on conversations, but we are always happy to say you're not ready for sale, but sort of at no cost or no obligation, we can give you a sense of where your stats are compared to what would get you a premium valuation. So where's your ARR, your revenue growth, what's recurring, what's not, what growth rate do you want to achieve before you're ready to get multiple that's sort of in the median to premium range. We can help out with looking at the customer retention and adjusting that analysis for maybe some of the churn is healthy churn because it's not your ideal customer profile as you're going through product market fit. We can go in and say, this is how you'd probably sensitize that analysis and how we would do it and how you'd bring that to market and tell that story. We'd help you look at the gross margin and CAC, cost of acquisition profile, and how that sort of compares to companies that are a little bit larger. And even things like where your ideal customer profile, what's the unit economics on a net new customer, and what does that look like once the customer is mature? What's the time to maturity for this unit economic base? All things that people ask about when you're thinking about going to market, and they want to see sort of an evolution of how that's changed over time. And we help tell that story and pick out the pieces that you should be paying attention to. And maybe you're not tracking any of that, and that's fine. And we just sort of give our opinions there. So it's a long way of saying it's never too early for us to build these relationships. And we're sort of always happy to, again, at no cost, to share our notes on what we're seeing in the market, sort of the reciprocal relationship here, what's going on with all of these founders and what you've all been, these beautiful businesses everybody here has been building, and just figure out how that ticks and ties to our world and what we can do to help you.
And look at, and I mean, a lot of people say great things, but they don't always put their money where their mouth is. And, it's been so neat to watch Tyton move with such intention and integrity through the space. And to me, this is the opportunities that as founders, we don't always know, right? We talk so much in our founders and funders, hey, we need to build our advisory board and we want all these people really close to us. This is a resource now that is not on the beaten path. Not everybody has access to it, but I implore everyone to be able to take advantage, again, both from an information standpoint and making sure that, hey, like our North Star, we're doing all the right things to get there. But secondarily, to open doors that you might not have known were even viable or that you had a pulse on, right? And so, I mean, I'm looking at a couple folks, and whether it's Zoya, Ryan, I think there could be some really interesting things with what you guys are building. And so, Brian, it's great to get a better understanding. I know we have a couple questions, so I'm going to take a pause and let some members pop in. And then I got a few more as we keep building, but let's go ahead. We're going to go with Nick Standard, my man. Floor is yours. Let's have some fun.
Awesome. Thanks, Scott. Brian, great to meet you. Thank you for taking us through all that. Really interesting to hear. I love all the financial analysis stuff. I'm a fractional CFO, so you're talking my language there with all the stats that you're going through. We should definitely speak after this. It'd be great to chat more about that. So my question is, I love all this educational platform movement and the thesis that you described. From the UK, we have less of a collegiate system and more of an academy structure with our sports teams. How are you seeing your thesis move as the US moves more to that academy structure over here?
I actually love that question because I didn't get into all the projects we were working on, but what I am seeing is in our space is the emergence of what I would probably call sports academies and micro schools, where the rise of these they want to combine elite training with really comprehensive education programs. And Europe has figured that out. The United States has not. The academics focus on physical development and ensure athletes receive academic support. But I wouldn't say that the US has identified or figured out the technology component that's most efficient for the non-traditional scheduling that's required in these academies in Europe. So I've been working with a gentleman who is interested in exploring the space and exploring what schools are for sale where they could take the proprietary, I would say, coaching and talent ID and non-traditional scheduling that the European side has figured out in their academies, and combine that with a academic rigor and standard that you'd see at some of the top private institutions, and figure out a way how to stop these athletes from having to do all of their homework at 8:00 on a Friday because they're traveling so much in the US-based academies. So it's a really interesting question and model that there is a probably a best practice where they both fit together. But right now, right now Europe has the academy model figured out, and the US is trying to figure out how to integrate that into their academic setting.
And Nick, just to complement that, through our lens, Andrew and I, we're seeing a ton of both traditional academy structures where it's more of that boarding, but we're also seeing a lot of non-traditional, sort of leveraging the virtual education side of things. And then, taking advantage of existing infrastructure to create more day academies. I think a lot of it is contingent upon what we're going to see happen with the evolution of the NCAA. There was always a clear path as to where we would develop talent and they would push to. And I think that's getting murkier. One, as we just, Brian alluded to what's going on in the NIL and, what's coming downstream with some of the legislation. But also there's other pathways that are opening up with emerging leagues and other opportunities that now that amateurism is eroding, I don't have to take a singular path there. So I think it's an exciting time. And, we see it almost daily now of different, academies coming on board and coming online, which again promotes more opportunity to take new solutions and find blue ocean instead of trying to jam them into older ecosystems. It's exciting, it's happening. But there is the 800-pound gorilla of what this system has been forever. More momentum than we've seen, but I think a long way to go until it's completely normalized in the market. I don't know. That's my anecdotal 2 cents from what we see on our side, but I would definitely be paying attention to academies. Like they are coming with force. Oh yeah, I see your hand up. Floor is yours.
Thank you so much. Hey, Brian, shot you an email. There's too many synergies between us, between Summit and Morgan Stanley banking, all of that good stuff. You're preaching much of what I do all day. We're building Orgo, which is a platform for logistics of youth sports, but from a parent's point of view. So we'll chat more about that offline. That would be amazing. But curious from your guys' vantage, so much of this space is focused on the leagues, the operators, the managers, and NIL, the athletes themselves. Where does the parent stand? Because I, as a banker of 20 years myself, like the family wallet share is the holy grail of whatever we would work toward and kind of hope to, attain. And so here we're unlocking that from our kind of, build out of the platform. So just from your thesis, how are you guys thinking about the parents themselves within the ecosystem?
Well, they're usually the ones fronting the bill. So we are trying to, at least from the companies we work with, I've sort of brought up that point about the enrichment space and how a lot of these companies are, in education especially, they try to say that we service K through Gray and the parent is funding at least 75% of that. So whether it's getting them within the data set and focusing their marketing efforts and fundraising efforts. What they're doing is pulling proprietary data from a pre-applicant perspective to get a sense of the geolocation and the first generation graduate. What can we get a sense of the net worth of the parents? And then how do we go after them from a fundraising arch, keeping the lifetime value of both the student and parent relationship going from as early as the applicant phase to now I got to bring them back and have them donate to the alumni fund or come back to games and buy merch and then be a part of this community. There's a data collection and marketing effort that focuses exclusively on the parents, and you'd think it'd just be the student, but I would say that they play as much, if not more, of an important role in that sort of student life cycle. And I'm seeing a lot of marketing tech and agency technology services selling into athletic departments that are focused on that side.
Thrilled to hear it. Thinking about it the same way. Appreciate it.
Yeah.
Very cool. Yeah. You guys make sure to connect offline. It's always crazy where I was like, you guys might have met each other before at some point in the journey too. But, we don't have any other questions right now. I'm going to keep rolling. Brian, I'm curious, right? Like, I touched a little bit on the emerging league side of things. And I don't know if that's completely out of scope for you guys, but as we're watching the landscape evolve, I'm curious, are you guys finding or engaging with any of these emerging properties that could potentially work into building like an education arm, whether it's an Unrivaled, an LOVB, some of the new folks on the horizon? I'm curious how you think about them in the marketplace.
Yeah, From an emerging league standpoint, we have worked with some marketing specific agencies that are trying to help expand the brand and community of I don't want to say we work with the Savannah Bananas, but a team like that isn't as in one of the four majors or something like that. I would say we focus mostly on on sort of the higher education and K-12 side of things from the sports perspective, but that doesn't mean that we don't work with leagues themselves. We've done a lot of work with the PGA of America and the International Olympic Academy. A lot of, these don't strike me as emerging given their large brands and history, but
even though they operated sometimes.
But I would say it's been mostly with the more established brands on the professional side and the conference to team level on the higher education side.
No, that's perfect. I just wanted to touch on it. I know we had a couple of founders of some emerging leagues on here, so just wanted to get, make sure we covered that stroke. So I'm going to dive in just a little bit deeper now on you guys get to see a lot of these founders go through their journeys. What are some of the common overlooks or oversights of founders as they're building and they're so close to the fire that could, maybe handcuff them or preclude them from maximizing on the exit side of things? Like, what advice would you give to founders as they're going through this, through everything you see?
Yeah, that's a great question. I would say what I'm seeing in the space for a lot of the startups that we sort of talked about in the ERP space and that we're sort of disparate, not on one large platform, that it could be anywhere from 4 to 30 million in ARR, aren't yet profitable and face challenges scaling at a profitable pace or in a profitable way. And there is growing interest in consolidating these tools into a broader integrated platform that either teams or private equity can take a look at as a toolkit. But the roll-ups where they're not seeing the best valuation or they're sort of passing, or many of these companies have valuation expectations or previously raised money at high valuation at a high valuation during the low rate environment. And therefore there's a mismatch between founder expectations and private equity. But for those who haven't raised money yet, that was at a time of growth at all costs. And now there's this huge focus on profitability, path to profitability, or can you show me a unit economic model of a customer or a case study at maturity that is profitable? So I would just have that in the back of your mind, that there is a time for growth at all costs, especially early on. But as you're getting closer to an exit, this is more of an M&A exit or sort of a growth equity raise versus a VC raise. There's always going to be questions around that, just given the environment and the sort of deals that are coming to market that haven't gotten as much traction. There's still some volatility on what's going to go on with tariffs, what's going to go on with rates. And because of that, there's fear that raising capital from the private equity side or getting money from lenders, which are funding most of their leverage transactions, are going to require more money from the companies to pay off that interest, and therefore need to see some form of profitability to get a better multiple. And that's just something that I don't blame founders for not paying attention to early on, because you want to get revenue, you want to figure out what your best customer profile is, product market fit, am I in the right market, which costs money, and you need a sales team if it's not all founder or CEO-led sales. So that's been something that's certainly been important in our conversations.
That's super helpful. I think that's a real nugget. And I would encourage everybody to take that, right, and go dig a little bit deeper and understand how you fit, or reach out to Brian and have a conversation. I think that's these are the things that sometimes you don't know until you're in the belly of the beast, and you just don't want to make decisions that will hamstring you later in the journey. So I think information is key when trying to make these decisions. I'll take a pause here. If not, I have a couple more questions, and then we make it a few minutes back in our day. Anybody have any questions for Brian? Feel free to come off mute, raise your virtual hand. Going once, going twice. All right, Andrew, you got anything?
No, I think it's been pretty spot on so far.
So then I'll keep rolling, Brian. I got a couple more from my side. What's got you most excited as we look into the rest of 2026, both from a personal lens and then from a Tyton lens?
So personal lens, I think that's something that's super exciting in the sports landscape, as I'm sure we're all aware of how college sports are undergoing a significant transformation with the introduction of the NIL, which some people say is not the Wild West. I disagree. There's impending revenue share agreements from lawsuits in college, and all of this has launched this potential for collegiate athletics to turn into an attracting investment. It's gaining attention from private equity firms and could be considered its own asset class because they want to explore opportunities to invest directly into athletic departments, or conferences, and that's never happened before. And the conferences have never been open to that before, given the nonprofit status, and they don't understand how that model would work. So what we've seen over the last year is a school like as big as Florida State University. They engaged with, I think it was JP Morgan, to assess potential investments into the school's athletic department sort of as a whole, and they're gaining a lot of traction from funds like Sixth Street, for example. And you're seeing the Big 12 Conference that was considering almost $1 billion investment from CVC Capital Partners for a stake. So figuring all that out and how private equity or investment is going to be integrated into college sports, it's going to present a lot of complex challenges because these universities, they operate as nonprofits and they have long-term missions. And that's kind of a contrasting view with the typical private equity playbook, where they're looking for short-term or shorter-term profit-driven approaches. And they're not, these firms can't just go in and cut a bunch of the athletic department staff. That's not how it's going to work like it would for a smaller or a SaaS company. So with the NIL, the transfer portal, the expanded playoffs, all of these layers of complexity are added and present very big revenue opportunities. So where does a sports and education investment bank fit in that sort of intersection? These schools need advisory. They need to be introduced to private equity who is willing to invest in them. And I think it's just a very fun, complex challenge that we are very, I would say, professionally adept to service all of these colleges. And we have a Center for Higher Education Transformation, which doesn't just focus on sports, it focuses on everything else that's strategic for higher education company or higher education schools. And it's been a fun, complex project to work on going to market with.
Man, and I think, we're in the first inning of it. Like, it's just getting going. And anybody who says that NIL isn't the Wild Wild West is, I don't think they know what the Wild Wild West means then, because this is, to me, the pure definition of chaos. But again, I think that a lot of people get paralyzed in this chaos. It's really neat, Brian, when you're positioned, before it all starts to unravel, to understand both the sporting side of it and the higher ed side. One thing that we talk about here, like at Profluence, is sitting between innovation and capital. We want really good business to happen, but we want better products to come out of it for the sporting market. How do you guys think about that from like a responsibility lens? Like, do you take all deals that come in, like that makes sense on paper, that necessarily might not be the best for the ecosystem? Or how do you balance like sort of your position and responsibility with where you guys have put yourself?
Yeah. It's naturally working in education. Most of, if not all, the companies we work with have some form of impact thesis, and you could argue that it's responsible for us to find capital solutions or targets for all of them, because at their core, they're servicing the student, they're servicing parents, they're servicing higher education outcomes. So we will certainly do, before any deal, our due diligence to make sure that the financials are in order. We talked a lot about those analytical and quantitative pieces that we pay attention to, but there is the qualitative thesis, there is the qualitative strategic positioning of the company that we will help build and help present. This is how we would bring you to market. We at Tyton need to be in agreement that is at the core of our mission as well as the markets. And it's very rare that we run into a company in our space, whether it's in sports or in education itself, that aren't trying to do more impactful, better work for the industry and education in general.
It's good to hear. No, as I asked the question, I was almost assuming that answer, but I still think it's good to understand, right? Because you don't want to sell your soul for the deal and then have it impact future generations downstream. So just curious how you guys thought about that. This has been so insightful. I think that what you and Chris and the whole Tyton team have is a true weapon in the space that, we appreciate you coming and sharing with our members. I'm going to open it up one more time, going once, going twice, three times. Anybody else have a question for Brian before we get back to the day? All right, Ryan, my man, you, and then Dan, I see you with your hand. I'm coming to you next. Ryan, floor is yours.
For sure. Brian, nice to meet you. Fellow Lax bro. Division 2 though, not as good as Division 1. But we're developing a full body intelligence platform to collect continuous physiological and biometric data, and we do multi-device analytics. I'm curious how you see the future of those three components that you guys discussed, which is technology, sports, and education. I have my own thesis about it, but I would love to kind of get your future look at what you see like the next 3 to 5 years.
I am very bullish on the next 3 to 5 years, even across the categories and in med ed or medical biometrics, any data that's not just, I've been speaking a lot about sports administration platforms or other sports tech platforms that service the marketing and the sort of student lifecycle side of things. But there's so much more that I haven't even gotten to in electronic medical record keeping, concussion protocol, all of these also sell into K-12 and higher education. So in terms of where I think sports investing is going to, right now, I think it's the trendiest strategy that has hit private equity since the SPAC craze, but I feel that this has way more staying power. And firms and individual private equity partners have really put money behind sports franchises and youth. And there's, as sports teams valuations sort of skyrocket and rights skyrocket, there's these ancillary benefits that are going to trickle down to sports in general. And that's where all of these other targets and technology companies are becoming targets for investment dollars. If you just see what happened in 2022 alone, there was 1,000 deals in sports tech that was worth 90 billion or so, which was a 5 or 6 times multiplier year-over-year increase in M&A activity. And then if you look at what's just going on the fundraising side, there's 100 million, $500 million raises across the space that have sports tech and sports theses that they're going to put money to work for. So behind that investment momentum comes more of the innovation that you are all bringing to the table. And it's fueling up those ramps, ancillary revenue opportunities across sports, the fan engagement, the sports med side of things, the media, the performance tech. All of that is ripe for growth investment, for M&A consolidation. I think there's a whole lot of excitement, which we're seeing just from the stats of the fundraising and the private equity interests.
Yeah, no, we got 15, so you're good to go. I know we got a couple questions after you. All good, Ryan.
Cool. Yeah, so you guys, I think the lens I'm getting is you guys come on a little bit later at that growth phase, that M&A roll-up area. What are the partners or angels, VCs, or family offices that you guys work with early on to identify these companies?
There are a lot of family offices that we have relationships with that we introduced early stage. If it's venture you're looking for, if it's angel capital, a lot of high net worth individuals that are in certainly Chris's circles from all of his time at National Geographic, at the USPA, at the PGA, and Smithsonian, et cetera. And our experience with just the entire investor landscape across education that also goes into technology and all these other places. We're very close with impact investors, with VC investors, with people who specifically have this thesis on the roll-up, which would be people like in between, I would say, VC to growth stage investors. And I'm sort of happy to give you specific names in an email. Just I have to think about which one specifically would fit for your vertical, because some of them, while they do invest across sports in general, may have a thesis outside of biomed tech or something like that. But I know people like Next Phase are interested. There's a lot of Bridge Growth, Resolve Growth, all of these funds do sort of growth equity, some upfront investing from the angel side. The VC and Park Ventures is another great one, or built out of the Dodgers. So happy to follow up on that one, right?
Awesome. Thanks for the time, Brian. What's the best way, or do we have contact information, Scott?
Yeah, we'll drop that, and again, Chris is in there, Brian's in there, so we'll make sure you guys get connected. But we'll share that all in the follow up.
Awesome, thank you.
Yep, for sure. Great question, Dan. Coming up to you. I think you had a question, my friend.
I do. Good morning, Brian. My question a little site specific and very pointed. We haven't discussed it all this morning, sort of hard assets, a lot of tech heavy conversation and not there personally. I've developed some sports resistance training equipment, sort of better mouse traps for certain sports and certain positions in those sports. Is that something your company delves into at all or directs?
Yeah, I spoke a lot about the technology side of things just because there's more of an intersection on the education side, which was sort of the thesis we wanted to talk about here. But in our work with the PGA, you can imagine there's a lot of hard assets that they're leveraging in terms of their simulations or their drive shacks, their boxes that they use for training, health and wellness brands in terms of gyms and performance tech, but also the real assets themselves and their expansion. So we do certainly, and even in education, you can imagine there's a lot of supplies, furniture, STEM environments that have curriculum tied to it that sell into schools that are sort of real assets as well. So we certainly have expertise there, and we're not limited to technology. That's just what we focused on today.
Do you operate like a Shark Tank in simple terms? If someone came to you with a good idea and it looks like it can make some money, what do you do with that?
We are the intermediary between the investment you would require for that and yourself. So we understand the market and who would be interested in that, and then we would introduce you to the folks that can fund the project, or if you're looking to bring on a growth round or a venture, or if you simply want to merge or explore a sales process, we'd run that for you.
Super. Good to know. Thank you.
Dan, I appreciate you asking that too, right? Like, I know this was super, tech heavy, but it is important to round it out. So appreciate you chiming in. You guys should connect, especially Dan, with sort of the vision of what you're doing with Blitzblock. There could be some interesting avenues that Brian could open up or doors there. So appreciate you holding down the hard goods side of the fence. All right. Anybody else? We got a couple minutes left. Jen, of course, I saw your message and I just neglected it. I'm sorry. Floor is yours.
It's all right. No worries. So we have a sports medicine company where we do in-person services, but we also have a virtual athletic training room, and we're building an athlete-owned electronic health record that will also have a back-end API that does concussion testing. What we are starting like with youth sports outside of the schools. What is the process for, getting into the school system, having worked in the school system and seeing the ordering process and the vendor process, for me on that side, it looked like a whole big mess, but what does that actually look like from your side of things?
You're right to assume it is a whole big mess. Getting into schools there's a bunch of ways you can go about it, and you can think bottom-up approach where you're going to individual schools and then relying on word of mouth or schools within a district that are usually what you see in education is everybody asks who else has this, and then they want to either compete with or follow what other schools have done. The bottoms-up approach would be I don't know your revenue model. I have an understanding because I know a lot of these of the electronic medical record companies, but selling it to athletic trainers, giving it to them for free, and then sort of building up your base, and then going the individual school route, and then getting 8 in this district, and then trying to upsell to more schools and cross sell over time, which is a little more difficult but more lucrative, is the district down sales, where you're meeting with the supervisors and district heads and saying this is a must for your schools. You can think of, I'm sure you're familiar with assets like Healthy Roster or Privet, which are already in those schools. And actually, I know those folks pretty well. So if there's a connection or network to be made, I'm happy to make an introduction. But they're sort of working on the district approach, where they're going to the decision makers versus spending a lot of time on individual schools. And it's just again, it's always, a lot of these districts will say, some of them are very different, some of them are going to be very similar, and say, okay, if this district's in, then that's a good proof point for me. That's enough. Let's do a test drive or a pilot.
Thank you. Would love to connect more and discuss your open to it.
Sure. Absolutely.
I feel like getting into schools is an art and a science, very similar to raising money. It's, and the hard part is there's no uniform across it, as Brian alluded to. Some operate one way and some operate another way. But if you're able to crack that nut, I think there is a ton of opportunity, Jen, especially for what you guys are building. So,
and that's why we're starting with youth sports first. So
yeah,
but
and they do.
it is a vision down the road. So
I mean, look at Brian's thesis will tell you that, education and sports are going to collide at some point in the journey, right? So, I mean, look at guys, this has been absolutely incredible. The engagement, great questions. And Brian, most importantly, man, the wisdom that you were able to bring and drop for the community. Can't thank you enough. Any closing words, thoughts for us before we get back to the day?
I would just say, I'm thrilled to be a part of the community. As I alluded to before, I am where I am because of everybody in my sports network that have helped me on whether it's a job, an interview, or just an introduction. So I'm here to do the same for everybody here. And you're all building very amazing, interesting companies, and anything that we can do to just continue the relationship, we're happy to do so.
Love it. Love it. Love it, man. Brian, as always, man, these Fridays are caps to great weeks. Continue to come to these as you're literally one introduction or connection away from changing the whole course of your life and business. And we're trying to shrink that to actually make it happen. So as always, guys, you could have been anywhere in the world, but you chose to be here. And for that, we really appreciate you. Talk soon.
Thanks,
Thanks, Brian.
Thank you, guys. Bye.
Bye, everybody.